So after you finish the first call and you have all this leverage, you understand the income. And when I say understand the income, never do I ask, who do you work for? What's their address? What's their phone number?
Right.
I never say that, right? Like, hey, what do you do for work? I'm a tech writer for Artech. Got it. How long have you been with Artech? 2 years. Okay, is it exactly 2 years? Because I need a 2-year history. Right? Or I've been there for 7 years. Got it. Because I know I'm going to get your pay stub anyway, and I'm just going to get the info from there. It's that conversation. They feel like you're just filtering it real quick.
Right.
Make sense?
Okay. Yeah.
Yeah. And then it leads into different things. Like, are you the only income in the house? Yes, I am. Who handles the bills? You or your wife? My wife. Got it. So I do need to get consent from both of you in order to send out the details. When will you both be at a home computer or tablet to give consent so I could send it to you versus mail it to you? Well, we're both going to be home at 6 o'clock. Okay, perfect. I'll go and prep the information, have it ready by 6 to send it out to you so you can review it. Now, in order to prepare the estimate, I do need an updated copy of your credit report. So when I request a copy of your credit report, what's your date of birth? Make sense? And so the transition never sounds like, okay, let me put a couple options together for you and I'll call you back in a couple hours. Because that's how most of them sound, right? Never say that, but you break the idea in the second call. So what you do is you say, all right, great. So I'm going to go and put some details together for you, show you exactly what we could do. I'll have it ready by 6 p.m. to send out to you. I'll give you a call just to get consent so I can send it over. So now they don't know the rate. They don't know the payment. You still haven't answered any questions on fees because their focus is shifted. Like, fuck, Fred did bring up a good point. I only got a GMI account. I am making minimum payments. My FICO score is deteriorating because I'm only making minimum payments. So they're not worried about the rate anymore. They're like, hey, Fred, help me put out this fire. So the reason why that's helpful is because now on the second call, they are not expecting a pitch. In other words, you didn't say, hey, I'm going to give you a call in a couple hours with a couple options. You prepared yourself to have the other party at the table. And so now the transition happens like this. So come 6 o'clock, I'm calling you and I'm saying, hey, Fred, I'm about to send out the information. Is Laureen ready? Or, you know, your wife's name, right? Is she there to give consent? Yeah, she's here. Great. Put me on speakerphone. Okay, you're on speaker. Hey, Lorraine, this is Daniel. I had a chance to speak with Fred. He had mentioned to me earlier today that both of you are looking at a way to maximize cash flow, primarily because you guys are making minimum payments on $20,000 in debt, only hold $1,000 in checking and savings on average, and right now are living check to check. So you're looking for ways to increase your cash flow, pay off that debt faster, protect your FICO, and also kind of live more comfortably with more than $1,000 in your bank. Does that sound about right? Did I miss anything? Right. The wife now hears it and like, oh my God, this dude's heaven sent.
Right.
Yeah, that's exactly what, right? That's exactly what we want to do. No, Daniel, you pretty much got everything. I'm going to go ahead and give consent now. Got it. Now, before I send this out, I got an idea and I want to run it by you to make sure that this is the best method to achieve your short-term and long-term goals. Right. Now, it's not a pitch. You're not saying I got an option. You're saying I got an idea. They will absorb it differently. Because whenever you hear someone say, hey, I got an idea, you perk up and be like, yeah, what's your idea? Versus saying, hey, I got a couple options. Great. All right, well, let me hear the best. And unfortunately, most options sound like this. Option 1, 30-year fix, 3.25, no closing costs. And that's going to help you do A, B, and C. But the problem is, though, is that they only heard 3.25 and then they shut you out. They didn't hear anything else. They're just thinking about, okay, anyway, Fred, move on. What's option number 2? Option number 2 is 2.99, but I can give you $500 in lender credit and do this and this and this. But again, they're like, all right, well, you know, you can't give me closing, right? So they're taking it apart. So as an idea, you again reaffirm it. So if I were with you, I'm like, hey, Fred, I got an idea. I want to run by you, get your feedback before I send it out, just so I can make sure the information is worth your time. Because you had mentioned that you have $20,000 in debt, you're paying minimum, you notice that the balance is not moving. I can only imagine the FICO has taken a detriment. And I actually had a chance to look at your FICO score and hear the comments that credit bureaus are saying. Each and every single credit bureau says that the ratio of your balance to your max credit limit is too high. And that means that you basically have a balance that exceeds 30% of your maximum credit limit. So I'm going to help you remove that. I'm going to help you get that off because then they have no reason to keep your score low. My goal is to help you get to a 750 plus FICO because after this, we're going to get you 6 to 12 months of credit rehabilitation and working down that balance. In 12 months, you're going to have a better FICO, more cash flow, more equity, And then we're going to show you how to improve your term even more, if not actually reduce the life of the loan. So if I can save you 5 years off the life of the loan, I did the math. It's about $180,000 in lesser payment. That's our end goal, and I want to show you how to get there. But my idea is this. In order to do that, what we do is we focus on the debt consolidation. We get that $20,000 out of the way, turn it into a tax-eligible interest that you can write off, create enough cash flow, and also a surge of cash because you're going to defer a payment, get an escrow balance refund. So your $1,000 that you have in checking and savings is going to turn to $8,000.
Right.
Whether you decide to use that on other things is completely up to you. Bottom line is it gives you the option. But the reason why I think that this works is because in 6 months, then I can refinance you on what's called the rate and term, meaning you won't need cash out. Why would you need cash out? You don't have any debt, and your FICO is going to be stronger and your equity will be stronger. And then we can lower your rate and payment even more at that time. But because you have history with Loan Depot, that's going to be a courtesy service on the next time because you've done business with us, meaning that we're going to waive our lender fee. So it's pretty cool how it works because I've done it with so many of my clients that their FICO score by increasing doesn't only help with the mortgage, but it helps with other things. Do you ever plan to finance a car? Do you ever plan to use a credit card? Do you ever plan to co-sign for your kids? Right? The best FICO is going to get you the best deal. The best deal means you're going to get the lowest rate in payment. The lowest rate in payment means you get to protect most of your cash flow, which I believe is most important to you. So Fred and Lorraine, what do you think about that idea?
Yeah, that sounds good.
I thought you'd say that, so I'm going to go and release the statement. Here's the thing, though, is that I can't put that idea into effect until I get a couple documents from you. What I can do is timestamp it, though, just to make sure in case the market worsens tomorrow that I was able to release the disclosure. So go ahead and give e-consent, and I'm going to send you a quick items needed list. It's a short checklist of a few documents I need to validate because we work a little bit different here. We do our homework up front so that you're not spending 3-4 weeks in process for a loan that you don't even qualify for. The last thing you want to do is learn 5 weeks into it that you can't even get the loan. So we operate a little bit different to make sure that we dot our I's and cross our T's and make sure we have a bridge to stand on to cross to the other side.
Okay.
So that presentation, do you see? So it was an idea, you accepted it, meaning you said yes. Now you own it, rather than me asking you which option do you want.